In this series, we're starting with Tradeideas. Let's get into it.
The marketing says the system outperformed the market for 3 consecutive years, 20% annually, 33% in aggressive mode, millions of backtests every night across 8,000 stocks and 60 strategies, up to 50 signals every day before the market opens, telling subscribers exactly which stocks to buy, where to enter, where to set the stop, and where to take profit. The cost is approximately $2,136 a year. There are no refunds, there is no standard free trial, there is no independent audit verifying these figures. There is no regulatory requirement to register as an investment advisor before generating specific buy and sell signals for paying subscribers. The disclaimers say it is not investment advice, it is a tool, an educational resource. Whether the traders who paid 4 figures, followed the signals, and lost money agree with that legal positioning is a different question. Tradeideas was founded around 2003 in San Diego by 2 entrepreneurs with backgrounds in financial technology. The original product was a real-time stock scanning and alerting platform. The value proposition was straightforward. Monitor thousands of stocks simultaneously for specific technical conditions and alert the trader in real time. Before platforms like this existed, a retail trader had to manually check screeners repeatedly. The automation of watching was the genuine innovation. The transformation came when the company added an artificial intelligence layer to the scanning engine, gave it a human name, and marketed backtested returns as the headline number. A stock scanner at a few hundred a year became an intelligence-branded trading system at over 2,000. By 2020 to 2025, the term had become the single most effective word in software marketing. Adding it to a product description correlates with increased willingness to pay among retail consumers, regardless of whether the underlying technology is novel. The platform's revenue depends partly on whether the branding differentiates it from competitors' scanning tools in the subscriber's perception, not on whether the performance difference is measurable. The naming was deliberate. Giving an algorithmic system a human identity makes subscribers more likely to trust it, follow it, and attribute success or failure to the persona rather than to the underlying statistical process. The target audience shifted. The original user was a semi-professional active trader who understood scanning parameters and built their own alert logic. As the intelligence branding developed, the audience expanded to include beginners attracted by the promise of signals they could follow without building their own strategies. This expansion created a tension. The platform's genuine value is a SIS. As a professional scanning tool, the marketing increasingly appeals to people who may not have the execution skills to profit from signals, even when those signals are directionally correct. The premium tier includes the signal generator, the backtesting tool, a live trading room with daily commentary, and up to 20 chart windows. The basic tier provides the real-time scanner, without the signals at roughly half the cost. The refund policy is explicit. No refunds after purchase. Cancellation stops future billing, but does not recover the current period. Access outside the promotional test drive events means committing to a full subscription with no way out. The affiliate model uses influencer and content creator promo codes to drive signups. Affiliates earn commission on referred subscriptions, which creates incentive to emphasize performance claims that drive conversions without necessarily verifying those claims independently. The company promotes a third-party review platform's designation as evidence of trust, though such designations reflect user ratings and platform engagement metrics rather than independent performance audits. Tradeideas is not registered as an investment advisor, a broker, or a futures commission merchant. It operates as a data vendor and software platform. The signals that tell subscribers exactly which stocks to buy and sell are classified as generic analysis rather than personalized advice. A registered advisor would be subject to a fiduciary duty to act in the client's best interest. Tradeideas has no such obligation. If the signals consistently lose money for subscribers, the company is not required to disclose this, adjust the signals, or compensate anyone. The disclaimer architecture protects the platform, not the user. In 2025, the company launched an automated execution system that trades the signals without human intervention through connected brokers. Automated trading execution based on buy and sell signals for a monthly fee is harder to categorize as purely educational. No regulator has acted on this as of the research date. The product direction is worth watching. The signal generator runs millions of backtests every night across 60 strategy families. The strategies that performed best given current conditions, are selected. The highest scoring combinations become the next day's signals, delivered before the market opens with entry price, stop level, and target. The stock universe is heavily weighted toward low-float stocks, where momentum patterns are strongest and where liquidity is lowest. The backtest-to-live gap is the structural issue the marketing does not address. Backtests use historical data that has been corrected and normalized. They assume fills at the exact signal price. They do not account for the latency between signal generation and user execution. They do not account for slippage. They do not account for the market impact of thousands of subscribers receiving the same signal and trying to enter the same low-float stock simultaneously. The signal says, buy at a specific price. The subscriber sees the alert 2 to 3 minutes. After it fires, they get filled at a higher price. The stop triggers during normal intraday volatility. The stock then moves to the target. The signal was correct. The trader lost money. This pattern is the core of the paper trading versus live trading gap that the community consistently identifies. One user tracked 5 days of performance in January 2026. 2 good days totaling approximately 1,500. 3 other days between 200 and 250 each. A 5-day sample with no risk-adjusted calculation, no account of subscription cost, and no representation of what happens over 12 months. It is also the most specific independent performance data found in the research period. No independent audited long-term study of following the signals live has been published. No academic research on the system's actual value above what the subscriber would have generated without it. The verification problem is not that the system does not work, it is that nobody outside the company is required to check. Tradeideas for anyone who needs the most capable real-time stock scanner available for intraday momentum trading, where 500 data points and filters serve professional active traders who build their own alert logic, where the backtesting tool validates custom strategies before risking capital, where the live trading room provides educational context, and where the signal generator reduces the cognitive load of scanning 8,000 stocks manually. Accepting that the premium tier costs over $2,000 a year, with no refund and no standard free trial, that a beginner with a $10,000 account needs to generate over 2% a month in additional returns attributable specifically to the signals just to break even on the subscription, that the performance claims of 20 to 33% annually are backtested, not live audited, that no independent verification of live subscriber performance exists, that the low-float stock focus means the signal edge degrades as more subscribers act on the same signal, that the affiliate model creates incentive to oversell performance claims, that automated execution raises regulatory questions that have not been answered, that the company has no fiduciary obligation to subscribers, despite providing specific buy and sell signals, and that a correct signal and a profitable trade are 2 different outcomes. The scanner underneath is real. Whether the intelligence branding justifies 4 figures a year, more than the scanner alone, is the question the backtests cannot answer. Every choice is a trade-off. At least now you know what you're trading.